Welcome to the Ontario Mortgage and Real Estate Insights Podcast, your go-to source for the latest developments, trends, and regulatory changes in the industry. I'm your host. I'm Sandy, your guest host from Keller Williams Legacies, here to provide you with insights sourced from reputable news outlets to help you stay informed.
Steve Hamoen here. This is brought to you by Real Approved Inc., a trusted mortgage brokerage dedicated to helping Canadians achieve their home ownership dreams. Visit realapproved.ca to learn more about how our experienced team can assist you with your mortgage needs. Let's dive into today's episode. Today we're starting with some big news in the alternative mortgage lending space. Neighbourhood Holdings has announced its acquisition of Fisgard Asset Management, creating one of the largest alternative mortgage lenders in Canada.
This is indeed a significant development, Steve. The combined business will have over $750 million in assets under management across 1,550 mortgages. That's a huge footprint in the industry.
Absolutely, Sandy. Not only does this increase their scale, but it also means more competitive rates and flexible solutions for the nearly 5,000 mortgage brokers they've worked with. It's a big win for brokers and borrowers alike.
And let's not forget about the human element here. This merger brings together two respected entities in the industry, both known for their commitment to transparency and innovation. It's not just about the numbers, it's about building a resilient company that can better serve its clients.
That's a great point, Sandy. Neighbourhood CEO Taylor Little mentioned that this acquisition reflects their belief in the increasing institutionalization of Canada's alternative mortgage sector. It's a trend we're seeing, especially as traditional banks tighten their lending standards.
Yes, and Fisgard's CEO, Rafer Strandlund, emphasized their long-term commitment to investors, borrowers, and the broker community. It's clear that both companies are aligned in their values and vision for the future.
With Fisgard's strong brand and Neighbourhood's modern infrastructure, they're well-positioned to lower rates, diversify product offerings, and leverage technology for better outcomes. It seems like a strategic move to enhance their competitive edge in the market.
Exactly, Steve. And with the continuation of key roles for Fisgard's leadership within Neighbourhood, it ensures a smooth transition and preserves the trusted relationships they've built over the years.
It's also worth noting that Neighbourhood has grown its assets under management at an annualized rate of 28% since its inception in 2015. Their commitment to innovation and technology is evident, and this merger seems to be a natural progression in their growth trajectory.
And it's happening as Neighbourhood celebrates its 10-year anniversary and rebranding. They're marking a new chapter in their mission to deliver stable returns for investors and responsible mortgage solutions for borrowers.
It'll be interesting to see how this shapes the landscape of Canadian housing finance. Alternative lenders are certainly playing a more prominent role, and this merger could set a precedent for future consolidations in the industry.
Next up, we're talking about Home Trust's entry into the reverse mortgage market with their new product, EquityAccess. This is a significant move as it positions them as a new player in a space traditionally dominated by a few key players.
That's right, Sandy. Home Trust announced this launch at the National Mortgage Conference in Ottawa. They're stepping into a market that has been primarily led by Home Equity Bank with their CHIP reverse mortgage and Equitable Bank's Flex reverse mortgage. It's interesting to see Home Trust taking on the challenge.
And it's a timely entry, Steve. As Brian Leland, Executive Vice President of Mortgage Lending at Home Trust, pointed out, Canada is aging. The demographic of Canadians aged 55 and older is expanding rapidly, presenting a growing opportunity for reverse mortgages. It's a solution for many who might not feel financially ready for retirement.
Leland also emphasized that reverse mortgages enable homeowners to tap into their home equity in a tax-free manner. It's a way to leverage the hard-earned value of their homes without having to move out. This could be particularly appealing for those who want to maintain their current lifestyle without selling their property.
Exactly, Steve. And Home Trust's decision to distribute EquityAccess exclusively through mortgage brokers is a nod to their strong relationships in the broker community. Leland mentioned that they've built their franchise alongside brokers, and it's clear they value that partnership.
Home Trust ran a pilot with a select group of brokers in Ontario, which provided valuable feedback. This kind of collaboration helps them refine their offering before a broader rollout. They're planning to expand into British Columbia in 2025 and Alberta in early 2026, with a national rollout later that year.
It's also worth noting that EquityAccess is designed for homeowners aged 55 and older, allowing them to access up to 59% of their home's appraised value. There are no monthly payments required, and it comes with a no negative equity guarantee. This means borrowers will never owe more than their home's fair market value.
That's a crucial feature, Sandy. It protects homeowners and ensures that they won't be left in a difficult situation financially. The rates for EquityAccess are competitive, with a 3-year fixed rate at 6.64%, a 5-year fixed rate at 6.44%, and a 5-year adjustable rate at prime plus 2.60%.
Leland also highlighted the importance of education in this market. He mentioned that Home Trust's sales force will focus on educating brokers and borrowers about the benefits and workings of reverse mortgages. It's about demystifying the product and making it more accessible.
And with Home Trust's experience in working with brokers, they're well positioned to make an impact. Leland noted that brokers have been calling for more competition in the reverse mortgage segment, and Home Trust's entry could lead to a more sustainable market with better options for consumers.
Let's shift gears a bit and dive into today's real estate market with a focus on Toronto's housing landscape. Shane Dingman recently explored what $1.4 million can get you in Toronto, and the findings are quite revealing.
That's right, Sandy. It's fascinating to see how the market's evolving. The Toronto Regional Real Estate Board's September 2025 benchmark price for a detached house was $1,487,600, down 5.8% from last year. We're seeing prices at levels not observed since April 2021.
Exactly, Steve. And with a $1.4 million budget, you can find a variety of options. Take 11 Artriva Drive, for example. It's a raised bungalow on a 50 by 109-foot lot with 1,300 square feet of living space. It features 3 bedrooms and 1 bathroom with a recently renovated main floor.
It's a classic post-war bungalow, Sandy. Located in Bathurst Manor, the detached home prices in this area are down nearly 7% from last year. The area is central, and you can walk to the subway, which is a big plus.
Another option is 77 Morning View Trail. Priced at $1,499,000, it offers over 3,000 square feet of living space with 4 bedrooms and a basement income suite. It's on the northeastern edge of the city, known for its affordability compared to other Toronto areas.
That's quite a sizable property, Sandy. However, it is priced at a premium in a neighborhood benchmarked at $981,800. It's interesting to see how it's positioned relative to the market.
Then there's 658 Davenport Road, priced at $1,428,800. It's located in a more expensive community, but it's competitively priced with a modernized interior, 3 bedrooms, and over 1,100 square feet of living space. Plus, it's more than $1 million below the area's benchmark.
It's a tough market, Sandy. Even with such competitive pricing, homes can sit for a while if there's any perceived drawback. As the listing agent Ryan Wykes noted, buyers are very particular these days.
Finally, if you're considering a condo, there's 801 to 270 Queens Quay Blauvd, W, listed at $599,900. It's a 1-bedroom plus den layout over 825 square feet. Given the drop in condo prices, it might be a good value compared to newer condos.
Condo prices have indeed fallen significantly, Sandy. The market's been turbulent, but there are still opportunities for savvy buyers. It's all about finding the right fit for your needs and budget. Thanks for tuning in to another episode of the Ontario Mortgage and Real Estate Insights podcast. We hope you found today's insights valuable as you navigate the world of mortgages and real estate.
Before you go, a quick reminder, Real Approved is here to make your mortgage journey smoother. Whether you're buying your first home or refinancing, their experienced team is ready to guide you with personalized support every step of the way. Visit realapproved.ca to get started and take the next step toward achieving your homeownership goals. Catch you next time, and stay informed with the latest industry insights.